A perfect storm of great conditions and really smart strategy just led to a massive, record-breaking quarter for the fertilizer company Krishana. So today, we're going to break down exactly how they pulled it off and what it all means for their future. Here's how we're going to do it. First, we'll hit the headline numbers, then we'll dig into the market forces and the clever strategy that made it all possible, and we'll wrap up by looking at their really ambitious plans to basically own this market. All right, let's just cut right to the chase. The big story here is pretty simple. Krishana just delivered a truly historic performance, completely smashing their old financial records. And this was no accident. The company's director, Pankaj Ostwal, came right out and said it. He called it a milestone quarter and made it super clear that this success was the direct result of some very specific strategic moves they made. So you might be wondering, what was happening out in the world to create such, well, fertile ground for growth? Let's take a look at the external factors that really set the stage for all this. I mean, you really couldn't have designed a better environment for them. India's big winter planting season was fantastic, with way more land being farmed. On top of that, you had plenty of water in the reservoirs and really strong government support. Everything from subsidies to just making sure fertilizer got to the right people at the right time. It was truly a perfect storm of positive conditions.
Okay, now let's talk about a crucial industry trend, because this is something Krishana is perfectly positioned to capitalize on. We're talking about a fundamental shift in the type of fertilizer farmers are using, and this is totally key to understanding their whole strategy.
So, what exactly is this shift? Well, it's a major change in what farmers, and you know what, even the government, wants from fertilizers. Essentially, the market is moving away from the old standard, which is called DAP. That's a generic, one-size-fits-all product. The future is all in these specialized NPK blends. Think of it this way. DAP is like a generic multivitamin you might take every day, but NPK is like a specific prescription from your doctor, tailored to exactly what your body needs. It's the same for crops. You get much, much better results.
And get this, it's not just a trend among farmers. The government itself is pushing for this change. They get that these specialized crop-specific fertilizers are the key to improving the country's productivity, so they're actively encouraging this shift away from the generic stuff.
All right, so we've got the context, right? A strong market and a huge industry shift. Now for the fun part. Let's see how that translated into the company's financial performance. And wow, the numbers are seriously impressive. First up, the big one, revenue. In the third quarter, they hit an all-time high of 659 crore rupees. And just for context, 1 crore is 10 million. So we're talking about a massive number here. And to put that number into perspective, just look at this chart. This is explosive growth. Their revenue more than doubled compared to the same time last year, jumping from 304 crores all the way up to 659. That is a huge, huge leap. But it's not just about sales. The company's profit after tax also saw some staggering growth. It jumped by 62% year on year, hitting 33 crore rupees for the quarter. So how did they pull this off? Well, they were basically running their plants flat out. They hit their highest production volumes ever. I mean, look at this. Their SSP plant was running at an incredible 107% of its capacity, and their NPK plant at 98%. That just screams massive demand and incredible efficiency. Okay, so here's the crucial question. With their factories already running beyond capacity, how on earth did they manage to more than double their sales? Well, their strategy is this really fascinating two-pronged approach. But wait a second, this leads to a bit of a puzzle. If sales are booming and the factories are maxed out, why did the company's overall operating margin actually go down, falling from around 14.6% to 10.6%? That kind of feels counterintuitive, right? Well, the answer is right here in this chart in the revenue mix. While 413 crores came from their own high-margin manufacturing, a huge chunk, 245 crores, came from importing and trading fertilizer just to meet that overwhelming demand. And here's why that margin dip happened. It's simple. The profit on those imported products is much, much lower. We're talking a solid 14 to 15% margin on stuff they make themselves, but only about 4 to 5% on what they import. So they made a very deliberate strategic trade-off, sacrifice a little bit of margin to capture a whole lot of revenue and market share. Okay, so that's what's happening now. But let's look to the future, because this all builds into their long-term vision.
They're not just going to keep importing forever to fill the gap. Oh no, they are building aggressively to capture all of this demand themselves.
And they have a major expansion project that is moving at a really aggressive pace. The orders are in, the big construction work is almost done, and they are right on track to start full commercial production by their target of April 2026. And this is no minor upgrade. This new plant has the capacity to add a massive 1,000 crore rupees in potential annual revenue once it's running at full steam. That is a total game changer. And management is showing some serious confidence right out of the gate. They're targeting 60% capacity utilization in the very first year. That tells you they are absolutely certain that the demand is going to be there waiting for them. And this is where their whole import strategy becomes just brilliant. They call it a seeding operation. They're using those lower margin imports to get the market familiar with all these different NPK fertilizer types. It's a way to build their brand and their distribution channels so that when that big new plant finally comes online, the demand is already there and waiting. It's genius. So this leaves us with one big final question. Krishna Foskam has masterfully ridden this wave of huge demand, using a clever mix of production and imports. Now, with this massive new facility on the horizon, can they convert this moment of opportunity into long-term market dominance? It really feels like all the pieces are in place.